Property Investing for Women, empowering women to build wealth through property. A podcast brought to you by Investor Women. Create, nurture, prosper.
Today's guest is a dreamer. She's not afraid to dream big. And I want to introduce you to Cathy Brown from Activate Finance. So let's find out about who Cathy really is. Who are you? How did you grow up? Where you grew up? What can you do about finance?
Yep. Okay, that's a lot. Okay, so who am I? I would say I'm a people person. I love people. I have a big Italian family, so there's always some excuse for a get-together, eating lots of food, lots of family. I love having all my friends around as well, so I've got lots of friends. I would say I'm a bit of a foodie, so I love going out to restaurants. I love cooking for people as well, so trying new recipes. I am a mum, so I've got a 12-year-old daughter who just keeps me on my toes, is really active and lots of fun and very curious. Mm-hmm. I am a wife, so I've got a very supportive husband that I'm always coming up with, crazy ideas or new ideas, and he's always there to, I guess...
Are you calling him crazy?
No, I think I am the one. I'm always thinking and dreaming up these things, and he's bringing me back down to earth and saying, okay, let's think about this. So it's the yin and yang with us.
That's lovely.
Yeah. And I would say I'm a person who loves traveling. So exploring and finding out about new countries and people and food. I love learning new things, and I'm obsessed with investing. So I love learning about investing and different strategies. So that's me.
It's nice to know. And how come you came into investing? How come you became obsessed with investing? I mean, it has to do with something, how you grew up, or where did you pick it up from?
Yeah, if I start and look at the beginning, and my dad migrated here from Italy, so he came from a very poor family. Right. And when I spoke to him about who taught him about money and who taught him about investing, he said nobody. It was just about survival. How were we going to get the next meal on the table? That's all his family were concerned about. Mm-hmm. And he knew that if there was any chance of him having an opportunity, it was to go to another country. So his sister moved to Australia, and he thought, okay, well, I'm 21. The time has come. I need to go and build something. So he migrated to Australia, and he basically just saw this country and was amazed and just at the opportunity. And he made a conscious decision then that he was just going to look at life differently. Everything was a blessing. He was going to be grateful. And I think what I took from him was he didn't really teach me about money. We didn't talk about it because he didn't have that education. But what I did take from him was he was always positive. Mm-hmm. He was always grateful. And the biggest thing was he was a dreamer. He used to dream about things, and he'd talk about it to us. And he used to say, one day, I'm going to run my own business. One day I'm going to own the workshop, because he's a mechanic that I work out of. One day I'm going to own things like other people. And he'd believe it, and he constantly spoke about it, and he'd visualize it. And it happened.
Absolutely.
And things happened by accident, not because he researched it or he had, the internet or the education that we have now.
He was very focused. His energy was there.
His focus, and he was positive. And so many people, he told me that so many people would tell him, it's not possible. You can't do that. You don't have enough money. You don't have the knowledge. It's too scary, too much debt. But he always had this belief. And I think that transpired into me from a very young age. He was an entrepreneur. I always, thought I'd run my own business at some stage. And I was working in his business from, I think, the age of 12, actually, doing just bookwork and admin stuff. And for me, I've always been a visual person. So now I've taken it away, and I've always created vision boards, and those vision boards where I visualize exactly what I want, and I think about it, and I, take those baby steps as well. Sometimes they're overwhelming, and what I've learned is the bigger the dream, not to shy away from it, because things can really, really do happen. So what I've learned from investing from early days is saving is really important, especially for those unexpected times, emergencies and stuff. I've learned that think big, because the impossible can happen. And two, from when I was at home was make sure that you work hard and you can achieve. So that's where it all really stemmed from. And then when I turned 18, I thought, okay, now I need something more. I need to learn, and where am I going to learn this? Because my parents, they know what they don't know, and there was nothing more that they could pass on to me. So I was very self-motivated, and I started just reading lots of books, and I thought I want more. So I started attending different courses, and I went to these courses, and I dragged my friends with me, and they're like, what are we doing here? And I'd learn about things like tax, and I'd learn about trust structures, and I'd learn about, property investment, investing in property and shares and things like that. So from a very early age, I decided to take control and just go out there and learn as much as I could.
I know you mentioned that, so just going back actually, when you were studying, after high school, I know you were an accountant before getting into mortgage broking, so just a little bit about that journey there, if you would not mind sharing.
So I didn't know what I was going to do when I left school, and my dad said, that's easy. There's just three things available: a doctor, a solicitor, or an accountant. Choose one. And I really didn't know, so I did. I became an accountant. Good, child, did what my dad told me.
Yeah.
He's going to say, definitely
you had the experience when you were 12, right? So
yeah.
from that time, so.
Yeah. So I went to uni, became an accountant, and started working as an accountant. But early on, I discovered that that's not what I wanted to do for the rest of my life. It was too boring. It wasn't enough. There was something missing, and I knew I loved numbers, and I loved learning about different businesses. So I knew I liked that, but I just didn't want to do accounting. So I accidentally fell into banking. Long story, met a couple of people, and they said, why don't you try banking? So I did, and I was in banking in corporate roles for almost 10 years. And my last role, I remember going to my last banking role, and I remember visualizing and thinking, what do I want from this role? I want to become a people manager. I want to manage, and I want to build, and I was very ambitious, and I want to climb the ladder, and I was only in my early 20s. And I remember telling that to my boss in our first one-on-one, and he was like, how's everything going? What do you want? And I remember telling him that I want your job, and that's what I want to strive for. And he's like, okay. And it was funny because, then the global financial crisis hit, and there was a lot of redundancies in banking, and we didn't know what was going to happen. However, and it was sad because a lot of people did lose their jobs. I ended up continuing to get those promotions and become the state manager and then become the national manager, and amazing things were happening. And I think it was really because of that visualization and that dream big and
that
just
positive
go
vibe
for it.
you had to push you to get to there.
From my dad, I really think that's what drove me. And then I thought I would stay in corporate forever. I absolutely loved corporate. They were so good to me. My mentors, all the teachers that I had, like my bosses, and really took me under my wing. But I think the difference was I really did say exactly what I wanted. I didn't hold back. So they knew I wanted to be a people manager. They knew I wanted to continue growing. And I think, as women, we need to be more vocal about what we want, because we tend to hold back.
Absolutely. Yeah.
And I thought I would be there forever. And then my world changed. I became pregnant. And it's funny what things do when you're forced to take a step back. Well, I wanted to take, 12 months maternity leave. But when you're away from it and you're not running that 100-mile race and, doing new projects and what else can we give her to do, I was still. And I had my baby, and I was just like, okay, well, what's next? What am I going to do? And where do I head? So I started writing a business plan. I don't even know why I wrote this business plan, but started writing a business plan, and it was for mortgage brokers, because I had the privilege of working with mortgage brokers all over Australia. So I thought, I'll just write one, because I'm going to take the best and the worst and the things that I've seen and put it into a business plan, and then my staff can share that with different brokers. But what happened, Reshmi, was I started to fall in love with this business plan, and it started to excite me, and the passion, and I don't know why. And I think it was that little voice in the back of my head that was saying, okay, I think this is your time, entrepreneur, that little voice. And at the end of my 12 months, I actually made the decision, which was one of the hardest decisions, because my husband's major contract had just finished at work. we had made a really bad investment decision, which was really costly. And I just had a baby. And I was deciding to start my own business. Like, what?
Yeah.
I had all my family saying, this is crazy, do not do it. But I think the one person that really mattered at the time was my husband. We had really, we had lots of conversations about whether or not, or whether I should, whether I shouldn't do it. I was extremely fearful, scared, thinking about all the worst. So we made some decisions, and the decisions we made was, we're going to sell our house. We're going to consolidate our debt, and we're going to have some extra breathing space, so extra cash in the bank, so I can start my business, because I believe in this. I believe that I can do and bring this business plan to life. So that's what I decided to do at the time, and yeah, we put it all into motion and went from there. And I started my boutique mortgage business, and now it's over 11 years old.
Wow. Yeah, it's a long journey to get to there, and then you go through so many changes, you go through so many emotions, so much of pressure you feel as a woman as well, because when you were doing mortgage broking, probably I remember when I was doing mortgage broking, there weren't as many females doing it, and I remember you saying it still was not much different from you when you started. So those things do put pressure on us as women, as to you've got to really push yourself harder to make it. And when you have these goals and dreams, you're really pushing for it. You've got to kind of stand up and fight for your place, right? And did you have experiences like that?
Yeah, I've always been in a male-dominated situation. So whether it was starting as an accountant and being in an all-male office, and then going into broking, and there was a lot of males, not many females at the time. There's more females coming into the industry now, but I never saw myself at a disadvantage.
No.
And I think because I had some great male role models around me, including, at home and also in the workplace. So for me, I never saw being a female as a disadvantage. I just thought, okay, well, I'm at the table. How can I contribute? How can I have the confidence around to contribute? And I was telling you just the other day, I was at a lender round table lunch, and I was the only female, and there was 12 male brokers, and I was the only female. And I made sure that when the conversation started, I was the first one to speak, because I wanted to show I'm not intimidated by all these male brokers, and a lot of them are my friends and stuff like that, but it is male dominated. And I think, as women, we can't shy away from that. We have to embrace it, and we have to think the best and the positive of the situation, and walk in with confidence, because we are enough, and we deserve to be there.
Yeah, absolutely. So tell me about your property investing journey.
Yes, okay, so my property investment journey started when I was 21. So I had this driving force to always invest. And so when I was 21, I bought a investment property in Sydney, in Camperdown, which I still own. And me and my husband, who was my boyfriend at the time, we bought it together and we moved in. And basically we stayed there for about 5 years, and then we decided to upgrade and buy a house. So we bought a house in Sydney, and we turned the unit that we had bought into an investment property. Yeah. And I always had plans. I'm always a person who has short-term, medium and long-term plans. So the plan with this house was to stay in there for about 10 years. 10 years because we were going to continue building our careers, and I hadn't had the baby as yet, so I hadn't had my daughter, and we were just going to continue building our careers. And the house that we bought wasn't really child friendly. It was such a fun house, but it wasn't child friendly. So it was a 10-year plan. And then as we were building our careers, earning more money, we started to make different investments. So we were investing in land, and we were subdividing and selling, and we were making some good profit out of that. So then we got a bit too confident with investing, which we shouldn't, and we made a really bad mistake. So we invested with family, and our family brought forward this investment opportunity, and we thought, oh, this is great, this is the big one, we should put lots in, and because we'd done some smaller subdivisions, so we thought, okay, with the family, this will work. And
was it the trust factor?
Yeah, I think it was definitely the trust factor, and they were all professionals and so on. And I don't think no one knows that an investment, you just don't know, nothing's foolproof. And I think what happened in this case was external factors, the global financial crisis, that had a major impact on what happened. And we lost a lot of money. And that was the time where I got pregnant. And, I wanted to start my business. And oh my goodness, what? We've just lost all this money in an investment, and it was gut-wrenching. And, I think then me and my husband made a pact where we had two choices. We could just, be really negative and let it overrule our life, become probably really sick and divorce. Or we could unite. Okay, we've made this decision. It was bad. Okay, we didn't see it coming, but we made it together, and we can move forward, and we need to make some hard choices in moving forward. And that's what we did. We sold our house because we actually took the equity out of our house to invest in this investment with no return. So we made the decision to sell our house. We made the decision to go from a 4-bedroom house back to our 2-unit bedroom, two-bedroom unit, and live in there, basically. Yeah. And the plan was we'd stay there for 5 years. I'd build my business for 5 years, then we would hopefully have enough and be able to buy again, and buy in an area where my daughter could go to school, we could raise her and live in a beautiful neighbourhood. Yeah. Didn't go to that plan. 5 years, and the business, yes, it was growing, but it still needed, investment, and I needed to bring on people and so on. So it wasn't quite there yet. However, we just plugged away. I never, lost course of where I wanted to go. I remember my husband saying, "Oh, we're never going to get a house. We're never going to move forward. We're never going to." And I was just like, "Okay, I need to block out the noise, and just keep going. This is where I'm going. Yeah. This is my goal."
You don't want distractions at the time. So those where you start feeling like you can't go anywhere. Yeah. When you're focused, you don't want that noise now.
And it comes all the time in different ways, and it comes from people who love you and trust you, and then you're thinking, okay, am I doing the wrong thing? But I think inside you have to really, I guess, work out what it is you want. And if you feel like, there's no plan, and there's no plan B, I told myself, there is no plan B. We are doing this. There is no plan B. So I was crystal clear, laser-like focus, and I just went for it. So instead of 5 years, it took us 8 years. Oh. 8 years, and then I was like, okay, we're ready. And that's when COVID hit. So we're like, okay, we need to get out of this unit because this is not serving us anymore. Yes. And we did. We bought a property in Turramurra. And it's, we love it there, and that's where we're at the moment. I also invested within my super fund. So we bought a property in Melbourne within my super fund, and we've got that plugging along. And we're about to construct some townhouses as well at the moment. So that's where I am with property. Now, with property, I'd love to continue going and building my portfolio. However, we came to a lending cap. So I thought, okay, well, how can I continue to invest if we're at a lending cap with finance for the moment? So I started looking at other strategies, learning about different things, and I thought, okay, what's this share stuff that everyone keeps going on? How can it work? I saw it working for a lot of my clients. How does this work, and why do they do it and invest in so much? So I started undertaking, just reading lots of books, talking to lots of people. I don't know if you've heard of FIRE. Yes. So financial independence, retire early. Yeah. I became obsessed with that. So I started then investing in ETFs as well. So I continued to do that as well, as just diversification, a way to also earn income while, my lending cap exists at the moment. It won't be there forever, but just earn some money through dividends and capital growth through the ETFs.
So money management, right?
Yes.
So that's the crucial part. So when going through all of that, looking back, what would you have done differently?
Okay, so looking back, what I would do, I try and have no regrets. You know, I really do try and live with no regrets.
yeah.
But looking back, that decision, if I could change that decision that we made to go into that investment, I think we went into it too blindly. And it doesn't matter if it's family member or whoever is putting an investment opportunity in front of you, you have to do even more due diligence. And that's what we should have done differently. More due diligence. We probably shouldn't have put in as much as we did. So in hindsight, if we didn't do that, we would have been, I believe, in a different position. Our property portfolio would have been a lot bigger. But we decided a long time ago that, you know, we can't think about that and we have to move on and we have to think of the future. So, you know, investing in my business has been one of the best things because that allows us to continue to build wealth as well.
So when we were talking about those hard times, I'm just thinking that must have been quite taxing. And so how were you managing? Because it's all about management of the cash flow. So how did you manage those times, those years?
Yeah, I think we really pulled back in any spending. So I'm a saver. I've always been a saver. And we just really, I'm a budgeter because accounting background. I love Excel. Excel's my best friend. So we were really, you know, looking at what came in and what went out, and we tried to plug the holes. You know, if you think of a boat and you think of the leaky boat, we tried to plug the holes and not have so many leaks. So we did sacrifice. Like my husband was working around the clock with his business. I was working as much as I could with a little baby, and I don't recommend starting a business when you have a, that's nuts. So probably I would have done that a little bit different. But it's just watching what goes in and out and making sure that, you know, for now we have to pull back, but it's not going to be like that forever. It's take focus, have a plan in place. I've always been a believer of the plan, and make sure you're visualizing and staying true to that plan.
So what does the next 10 years look like for you?
Yep. Okay. So next 10 years for me is continue to build my mortgage business. I absolutely love helping people, and I feel so privileged that I'm in a position to be able to help people understand their finances, understand what's possible, what's not possible, what is possible, how can we create a plan to get there. So continue to create, I guess, better tools for my clients, educational tools to help them get there. And I guess also go out to people and get them to realise that start early. And don't be afraid. Don't be afraid. There's so many people that are afraid. So getting that message of let's look at this as early as possible. It doesn't matter if you can or can't do it now. Let's start. So getting that message across to be able to build that continuing to inspire and build that business of my mortgage business. For me, my true passion is helping women. So helping women become more independently financially, you know, independent, and also educating them on the possibilities, you know, having that plan, sort of giving back what I was taught. And I was taught by so many mentors, so definitely giving back to women. I'd also have a passion for children's financial literacy. So having a daughter, going into schools, we used to do these presentations. So just building on how we can make the next generation better in terms of understanding finance, not being fearful, and giving them a better start so they can build something sooner.
No wonder why we click, right? So that's the essence that we find. We bring out our own inner passion to help others. Yeah,
definitely. And also on a personal front, continue traveling. You know, making sure going to countries I haven't been to before, so doing that, and never stop learning. So I think, you know, learning lots of different things is what keeps things interesting in life. So continuing on that.
Good. Wow. So over the years of you having, you know, working in your business in the finance sector, what changes have you seen?
Yeah, there's been lots of changes from lots of regulation. Oh my goodness, lots of regulation. I think there's also been changes in the way people approach investing, you know, from being really conservative. And I see, you know, maybe the older generation where you buy one thing at a time, you pay that off and you do that. So just the education now and being able to see, okay, well, building wealth, it doesn't have to be like that. And there's so many tools available. And I think people that you can approach to help with that. So, you know, buyer's agents, that never used to be around or a thing when I didn't know about it when I started my business. You know, people weren't coming and
There weren't
talking.
many. There
wasn't. And now it's such a big, important thing. And still there's so many people that don't know about it. But with mortgage broking as well, when I first started, the percentage of mortgage or people going to mortgage brokers was pretty low.
Yeah.
You know, 50% or so, and people were still going to their banks because they didn't understand what mortgage brokers do. Now, over 76% of people. Or a 76% of market share is what the brokers have. So that's 1 in 3 people are now going to brokers to originate their loans or to get educated about finance and how to create a debt strategy, which is massive, which is a massive shift from when I started. And hopefully that will continue growing. I know the banks don't like it, but you know, that will continue to grow because people are valuing advice, people are valuing strategy, and I don't think people want to work until they're 80. No. They want to have choice.
There has been a shift, so people are seeing the possibilities. And professionals like ours and yours are making that change. People are seeing that the amount of education we put out, the right type of tools we give, it's quite helpful. And you're right. When I was doing mortgage broking, there weren't many brokers around to go and learn off or from. And same thing with buyer's agency. When we started, that was something unheard of. And the only reason we started buyer's agency was because of the properties that we had and teaching people about, hey, look, you can do this too, right? So that's that shift has definitely happened. From your perspective, when you are talking to somebody who's wanting to invest in property, let's say, or get started, what would you tell them? What would be your message?
Yeah, my message to them would be go and talk to a financial professional as soon as possible. Because even if you don't know if you can afford a property, that's okay. You just need to know your numbers, and you need to know your numbers before you go shopping for a property.
Absolutely.
So it's so important,
That's
you
so
know.
important.
So I get a lot of people that come to me later in life and say, oh my goodness, I should have spoken to you years ago, but I was just too scared. Or they've, you know, worked and in the corporate and grown their career and climbed the corporate ladder, and life's just passed them by. You know, they're on autopilot and they're just running this hamster wheel, I should say, and they just don't get off until it's too late. There's either a job redundancy or a change in their life, and they're like, hang on a sec, I need to build wealth. And I would say do it sooner than later. Even if you don't know or you're unsure, a plan can be created so you can get there. So that would be my biggest advice. Go and talk to a financial professional to understand your numbers.
Numbers is important.
Yeah.
Numbers is absolutely important. Okay, so we've talked about a lot of things. I wanted to draw upon your experience as a mortgage broker. You've sat down with so many people, seen their scenarios. What are some of the pointers you'd like to give to our audience?
Yeah, I think especially to women, because I know a lot of women are listening to this. Yes. So what I would say is really get to understand your numbers. Even if you are coming in and you're single, or if you're a couple, understand what it is, how much debt you have, what your assets are, what income you have, what expenses you have going out. So really get an understanding for what that is, because sometimes what I see is women rely on the males or their husbands or their partners to actually take care of that part, and they're in the conversation, and sometimes they feel too shy to ask questions. So I always try and make everyone as comfortable as possible. So I would say speak up, ask questions. There's no silly questions. So ask as many questions as it takes for you to understand your financial position. I would also say take time to put a plan together. You know, it's so important to put a short-term, a medium and a long-term plan, and don't be scared to dream big, because if you don't dream it, how is there any way for it to come true and for it to happen? So I would, you know, definitely say put a plan together, make sure it covers different areas of not just finance, but also your life, you know, what you want to happen in your personal life, what you want to happen at work, what you want to happen with money. So put all that together in a plan and refer to it. Don't just put it in the top drawer, make sure you refer to it.
Look at it.
Look at it and dream it and think about it and think about how it can happen. And that's not just enough to visualize. Then think about what baby steps you need to take forward. So it doesn't have to be all overwhelming. Break it down into little baby steps and work out, okay, how do I get a little bit closer, either each day, each week, or each month? So a breakdown of everything, and that makes it less scary. The other thing I would say is, and I've said it so many times already, start as soon as you can. Even if you don't feel confident, even if you don't think you could ever purchase a property. The number of times I get people come to me and say, I don't think I'm ever going to afford a property. And it's just so satisfying. I feel so privileged to be part of their journey, to watch them from having that conversation with me, you know, being really shy to ask questions, and then us being able to work through that, and then them, you know, being able to get that property or get into that type of investment that they've dreamed about. So I would say start early, know your numbers, put a plan in place, and don't be shy to ask questions.
That's putting it really well. Now, can I say this? Knowing your numbers, right?
Yes.
So it's not the numbers of knowing your figures, like 36, 24, 36, how we all women refer to our figures. Now, let's put three numbers that people should be looking out for. What are these three things, like cash flow or
So if I was to put it into three things, the most important thing is know how much money you have coming in, whether it's weekly, monthly, fortnightly. So know how much money you have coming in, know what your fixed expenses are. And when I say fixed expenses, your expenses that relate to if you're living outside of home. So think of your groceries, how much you're spending on your utilities, how much you're spending on if you've got kids, childcare. So what are your fixed expenses for the week, the fortnight, or the month? Understand that. And then once you understand that, I would say have a goal to save. So how much can you save, and put that into a different account, because savings should always be budgeted into your living expenses, I would say, because whether it's saving for a property, an investment, a holiday, or just that lovely thing that you want, maybe a handbag, shoes, but have something there for savings. And lastly, emergency cash. So have some of that savings split into emergency cash, because you just never know what's around the corner and what could happen. So if you've got that emergency cash there, you don't have to make any rash decisions, and you can take that time to really breathe, relax, and think, okay, what happens next? What's in the plan? Does the plan need to shift? And that's okay, it can. And it should be fluid, and it should be changing as you change as well.
Let me take you back to any scenario you might want to pick up from any of your clients when they come in and they see you. What is your process? How do you go through? What do you go through with them? And what are the problems you see people are facing, they're simple things that people could keep an eye on, but the people kind of not really think about those, and it's so simple for you, let's say, but for most people they are not really thinking about it.
Yeah. Okay, so my process when a client comes in and sees me, usually I've got a good idea of what their financial position looks like. So then we will go through firstly about what their short-term goals are, and we will talk about their long-term financial goals. Now, it's okay if they don't know that, because a lot of people are unsure, and it's surprising how many couples don't talk to each other about it. So I'd say definitely talk to your partner about what your goals are, and and, you know, develop some joint goals. So we sit there and we spend some time understanding that, because it's not just about, okay, come and see me, I'll get you a loan so you can go shopping and buy a property. It's about, what is it that you want? And if you haven't thought about it, what questions can I ask for you to get to think about it? And it's okay if it changes. So putting that and seeing that come to life is exciting for me. I get excited with my clients, because they might say, oh yeah, maybe a property, maybe an investment, I don't know. I'm like, it's okay. It's okay. This is a safe space. So I create a real safe space for my clients. And then once we do that, we talk about we go through their figures together, and we talk about what their borrowing capacity looks like, and then we talk about what options are available to them. But one of the most common things that I see that could help people, which they don't know about, is they could really be mindful about how many credit cards they have, because I have a lot of clients come to me and say, oh, I've got all these credit cards, but I don't use them, or I pay them off, it's just for the points. That's okay, I've got credit cards for the points. But what people don't understand is, if they're wanting to look at what their maximum borrowing capacity is, those credit card limits can reduce their borrowing capacity up to 5 to 8 times, which can be massive.
That is
so
massive.
Either, you know, reducing credit cards, and you can do that after you find a property, or cancelling them. Even afterpay limits, they have the same effect. So if you have an afterpay limit that you're not using, but you've just got there, you know, for that just in case moment. I'm a girl, I like buying nice things, you know, but know that that limit will reduce your borrowing capacity also by 5 to 8 times. So to maximise your borrowing capacity, you know, there are a lot of things that you can do. So they're two of the things. Another thing you can do is just be mindful of how many loans you apply for, and not just home loans, but motor vehicle loans, because motor vehicle loans can also reduce your borrowing capacity, any personal loans, things like that. So any type of finance that you apply for, even if you don't use it and you've just got it sitting there like an overdraft, it will still reduce your borrowing capacity. So I'd say be mindful of that. The last thing I would say is, and what I see a lot of younger people, you know, don't know this, but make sure you pay your expenses on time, because that all gets recorded and the banks can see that now. So paying any bills, like phone bills you have on time, any utility bills, all your bills, make sure they're paid on time, because that can affect the actual home loan product or product that you get and apply for with the bank. And not just home loan, but credit cards as well. If you're not paying your debts on time and you've got arrears, or you've got late payments or court judgments and stuff, that could mean that you can't get finance in some cases, or you have to go to a specialist lender, and it's going to be costly. It's going to cost you.
So prepare someone starting for the first time, someone in their 20s coming in, having a consultation with you and wanting to start investing.
Yep.
Obviously, I will find them the property,
Yes.
which is great.
Of course.
This is where we gel so well, because the way you operate and the way I operate, we are for the well-being of that client. So it's like the wealth creation side. Though the services we provide is finding, like I'm finding the property, you're finding the finance.
Yeah.
But the whole focus is building that portfolio. So from your side, what do you do?
So I would always, I think the first property is the hardest to get into, because of the deposit, right?
Yes.
It's always the hardest, the deposit. And then the next ones are a bit easier because you've got equity. So what I would say with the deposit is, as you start your work life, whether it's, you know, while you're still in school, or whether it's when you leave school, get into the habit of saving. Save as much as you can. Live as frugal as you can in the early years, because later on, you know, it could be different. But if you start early, save for that deposit, or just continue to get into that habit of saving for emergency cash as well. That would be the biggest advice that I'd have for young people. And the good thing that I'm seeing now is there's a lot of different products, new products coming onto the market. So now there are different ways. If you've only got a 5% deposit, that there are lenders that are willing to lend a personal loan to help with that for the rest and to avoid the mortgage insurance. So there are new things that are constantly coming out in the market to be innovative. You know, all the lenders want to be innovative. The government's also, you know, they're constantly reviewing their position on how to get more Australians into the marketplace, because they want Australians to own their property, and they want young people to be able to get into the property ladder, because once you're in there, whether it's buying an investment property or an owner-occupied property, and we've seen it before, the next one can, you know, I'm not saying it's available to everyone to be able to have more than one property, but it can be, and it's just about getting the right strategy early and getting into the right habits early.
A correct financial structure is so important and so crucial. And that's why it's so important to have good team members in the good professions to help you, you know, build that portfolio, that create your wealth. If people are not investment savvy, they don't see, they're not able to see your goals, what you're trying to achieve. So that's why it's very important to have those right team members around you. I think we've covered a lot today. We have. Is there anything else you would like to add?
No, I think I've, you know, shared everything that I have done, and you know, the different recommendations that can help people get into investing early. I guess the last thing again is start as early as you can, and it's okay if it's not in the early stages for you and it's later in life. Just start, just make a start. It's really important to make a start. It's never too late to start investing and to create a plan to get there.
Absolutely. Well, thank you very much for coming and sharing your wisdom.
Thank you. Thank you so much for having me.
There you have it. Today's guest is a dreamer. She's not afraid to dream big, and I'll make sure to have her contact details in the show notes.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned. This podcast has been brought to you by Investor Women.